All right, traders, good day. Welcome back to the live trading room. Happy Thursday to you. How is everyone doing today? Give me a yes. Make sure you can hear, voice, see screen. Apologies in advance if my energy is a little bit lower than it usually is. Having a rough personal day already, right? 7:30 and already having a rough personal day. But hopefully being in the markets, doing something I love and enjoy, will get my mind off that stuff and can distract me a little bit. But good to hear. So if you've been with us all week, you know that this has been a very heavy week in the fundamentals. RBA Tuesday, FOMC Wednesday, Bank of England this morning, and then we have non-farms tomorrow. So we've seen a little bit of a congestion in the market, a little bit of movement yesterday as the U.S. news came out. And there wasn't much movement this morning, at least that I'm aware of, because it was nothing other than the expected came out. But typically before you have high impact news releases, you see the market really kind of just maintaining its current state. Again, no one wants to do anything drastic before news comes out. They'd rather wait until they hear the news, make sure there are no surprises, or evaluate the surprises and then make the decision making after that. So we have one more. We have non-farms tomorrow. Non-farms still traditionally important, nowhere near as important as it used to be a decade or so ago, but it still is kind of the most popular news event in the market. So we do need to be aware of that. For today's first trading opportunity of the day, trade of the day for you guys watching on YouTube and TradingView, we're going to head over to the dollar index. I'll tell you what I did yesterday as well. I got home. Wednesdays are my night where I'm alone, right? The kids and the wife are gone by the time I get back. And I dug back into that RSI book because we were having those conversations yesterday. I dug back into it immediately regretted it. Immediately regretted it as my brain turned to mush. Yeah, it was right there. I keep it by my nightstand because you never know when you want to do some midnight reading. And I opened it up and I'm like, I just want to look at one thing. I want to look at one thing. And then I got into it, and like an hour later, I got my notebook out and I'm taking notes. And every year it sucks me back in. But let's head over to the dollar index, right? This was a pair we looked at previously. You see some notes still on the charts, funny drawings everywhere. But you can see our two horizontal lines, and our two horizontal lines tell us that, well, we have recently come to a previous level of structure resistance, right? Look left, structure leaves clues. You look to the far left of your chart, 2017-ish. You're going to see our last structure highs. We came to that level. We did not violate that level. We held. So when we go through our IPDE process and we ask ourselves the question, what is price doing? What has price currently done? Our answer to that question is price has recently come to a previous level of structure. Price has held at that level of structure. Now you can see the big, the high momentum bearish candle on your chart in front of you. You can imagine what this looks like on a lower time frame, but we're going to see some consolidation here, and we're going to see a break to the downside. Now, before we get into that, all right, before we go down to the lower time frames, right, part of that identification process and part of that prediction process is notating your key levels of structure. Well, for me, structure could be key levels of something else depending on your trading style. For me, it's key levels of structure. So where are key levels to the upside, which we may go to next? Where are key levels to the downside, which we may go to next? And again, my philosophy is that structure is kind of like a magnet. Prices are pulled towards it. Prices are pushed away from it. So what I always like to do, and you can do this actually, by hand if you want, is just take some time to measure out the ebbs and flows, right? Do any of you guys still take the time to actually do this in the market? Just draw on the ebbs and flows, right? A little consolidation here. It may seem remedial, but it is a great practice to pull your eyes to certain places. Because then when it comes down to asking yourself where are the important levels at, right? You can look at your new structure highs. You can look at your outside returns. You can look at the levels that you hit multiple times on the upside, the levels that you draw out multiple times on the downside. You can look at past levels and see, oh, they line up with these levels, right? Stuff like that. It essentially gives you a map of what levels you should be paying attention to. So I know a lot of traders don't like doing it because it's boring, or maybe I don't know, maybe it makes them seem worse, like they're not a professional trader. I don't know. Believe it or not, we have stories like that where it's like, I don't want to mark up my charts because I don't want people thinking this and that. And I'm like, well, like, first of all, who else is seeing your charts? Like, I mean, I'm in a live room here, but if I wasn't doing this for you guys, like, no one sees my charts, so I'd like, why do I really care? Second of all, like, who cares, right? Is there any pride in having notes on your chart? Or not having notes on your chart? Does it make you a better trader if you don't have notes? No, like the job is to get it done right? That's like an artist, well, I'm not into art, but you guys can correct me. Like if you're drawing a picture or making a sculpture or anything like that, like I don't care what notes or objects you use to help you make it, right? I'm not going to judge you better if you do it with no help or you do it with some help, but like as long as the end product is good, that's all that matters. But believe it or not, it's that does come into play with many traders because it is a competition. It is about look and how you know what you put out there to the others that are watching you. I don't know. I don't get down with that type of stuff. But be shameless. Who cares, right? Do what you need to do for you to see the markets the right way and ultimately get to the correct end game. Real quick, I got a question on YouTube before we dig deeper into this. Akil, can I please ask you 2 questions about the cipher pattern? When measuring your target, do you always adjust it as your C to D leg continues to move beyond a certain point? Yes. Do you have any rules for identifying X to A impulse legs or any tips for consistently identifying the impulse leg? Yes. So that's a good one because that goes right into our kind of discussion here. So when we teach people how to trade, we teach it in a very systematic way, right? It starts off with the basic course, which just teaches you the basics of like what stuff is, what is a pip, right? What is movement, all the way to the advanced stuff. Now, when you look at advanced pattern formations, that comes in our mastery course, which is our first, second, third, fourth course in. Before that, you have 2 foundation courses, right? Foundation course 1 to foundation course 2. Those courses are both a study of price action, one more broad, one more specific. But one of the first things that we teach in those courses is how to read the ebbs and flows of a price chart. So basically the stuff that I just did, right? New structure high, outside return, new structure high, outside return. If you guys have been to any workshop that we've done, right, it's the same old thing, right? It's the first thing we teach every single time. I don't think I've ever done a workshop or a training where the first thing we teach is not that. And you do have a lot of people that skip over it because it's remedial, just like we spoke about. They don't want to waste time doing it. But the same way you're measuring out your swings, your outside return to new structure high or outside return to new structure low, your new structure high to outside return, your new structure low to outside return, right? The same way you measure those out, those are the same legs that are going to be your impulse and anchor legs, right? If you can't train your eyes to draw the ebbs and flows, right? Like you're doing the exact same thing. So there's really no secret into drawing impulse or anchor legs. It's just your ability to recognize swings in the market. The thing is, a lot of traders don't spend enough time, and it does take time, right? It's not easy by any means, but a lot of traders don't spend enough time training their eyes to identify the swings, right? See you, buddy. Have a good day. I can't tell you how many times we've spoken to traders who have rushed through that process, and then they get to a part where that skill comes in handy for various reasons, and then they got to go back. And we confront them. We asked them. We said, "Hey, like, did you do this?" And like, I kind of just checked the box and took the quiz, and I got 80% of the quiz, so I thought it was good to go. But you gotta train yourself. So the same way we just did, measuring out ebbs and flows, the swings in the market, right? Identifying trends, stuff like that. That's the same way we're doing impulse and anchor legs. So there's no secret. It is just the skill of reading a price chart. That is it. And it's a skill that, like any skill, you need to practice to get better at. So we got these levels that we know are important. Boom, 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 boom. We're going to lock that in a part of our brain or in our notepad for later. We're going to go down to a lower time frame, get a more detailed view of what price action has done at this level. So as we zoom in, right, you can see our consolidation, our little sideways shift. What has recently happened here on the 4-hour time frame as we shift down? We have broken and closed below our previous low watermark. Yep. Lower low, lower close right here. So right then and there, that's a sign that, hey, we should be looking bearish, right? We bracketed this thing off. We know if we broke to the upside, we'd be looking bullish. We know if we broke to the downside, we should be looking bearish. So we've had our bearish sign right here. We're now pulling back up into structure. This is something we call a 2618 trade or a 2618 type of trade. It's basically a pullback trade after a double top. And this is going to be an opportunity to look for shorts. Now, we already have some target levels drawn out because we identified structure. So we can keep that in mind. We know that, I'm going to erase this just to kind of clear up our chart. We know that the extreme of our trading opportunity is where? Where's the extreme? What would need to happen for us to no longer be interested? We'd have to, we have to violate the highs. So we know we can't come past these levels right here. We can have an idea of where this rejection zone may be. Technically, the pullback is anywhere between here and here. We have this high wicked candle right here. We can say, hey, this was a zone of bearish rejection before where the bulls tried to fight. They tried to push it up. This candle most likely started off as a green candle, and then they got defeated. Good chance that a battle may ensue there as well. So we can start IDing levels of where we think this reversal may happen. As mentioned before, we have an idea of where our target levels are going to be, right? Because we've identified the key levels of structure looking to the downside, right here, right? We can make adjustments accordingly if you want to use Fibonacci's or if you want to use volume profile. We won't get into that right now, but you can make your specific adjustments if you want to maybe raise that target up or push that target down or find a specific zone. But the trading idea that we're looking for here is going to be a bearish pullback trade where price pulls back, looking for a reason for entry and looking for a chance either, and this is going to depend on your trading style, either trade it back to the previous lows and or trade the extension down. I say and or because some traders will say, hey, I want to take everything off with an extension. Some traders will say, hey, I'll take a portion off, a partial off at here, take a partial off at an extension. So a decent pullback trading opportunity here. I'm going to go get this into our pro trade log. I need to actually get on our website. I never have it up because I use up a lot of energy doing this live. We shut it down for the, oops, wrong place. Before we shut it down for the week on the live stream, live rumors, of course, we've got plenty of more time here. Yes, you have to endure. Let me know if there's any questions while I get this in. I'm going to mute the mic real quick. I'll probably just talk in the background, actually. Take notes to myself. That way it doesn't seem like I leave you. All right, where's our pro trade log? There we go. You guys want to head to next, let me know as well, as we can start already thinking about the next idea. But let me get this into our pro trade log. We're looking at the Dixie, right? Yep. Dollar index, DXY. 4-hour potential bearish pullback trade. We'll just classify it as that. I'll shoot, and then we'll be good to go. Raj says voice lagging question mark. I don't know. Maybe. George says, do you scan pairs that aren't your portfolio just for teaching purposes? Oh yeah. So if you look at here's my portfolio over here under the nice clever. I'm glad trading my portfolio. So this is my personal trading portfolio. These 9 pairs right there. Personally, I don't care about anything else. So if I wasn't doing the live room here, I wouldn't. I would look at these as far as just like practicing. I believe I like to practice on random pairs. It's hard to practice on pairs that you follow because I already know what they're doing. Something every day for the last, I don't know how many years. You kind of get to know it well. So I still look at these for like other purposes, where if I want to just hop into a random period and kind of train my eyes or test something. But as far as actually trading, no, I don't trade any of these. So these are all for you guys. You see all the extra work I do just for you. Can you imagine how much shorter my day would be? Do you guys know how long my actual analysis takes place in the morning? Can you guess? Mondays are usually longer than the rest of the day, but by the time I get to Thursday, Mondays are a little bit longer. That's kind of the big day of analysis. Monday and Tuesday, I should say. Yeah, like 10 minutes. 10 minutes. Yeah, I can go through and again, I have experience doing this, but I also know exactly what I'm looking for. I know exactly what I'm looking for, and because I'm consistent every single day, I already know what's on the radar. So like by the time I look at something Monday and I take it in my notes where I identify key levels of structure, I know what the opportunity is, and then it's just kind of like a follow-up, like a checkup. So it's kind of like one of those things where you go to the doctor and the first time you go there, if you get like surgery or something, it takes a while. And then the next are just follow up where they're like, hey, do you have any pain here? Can you move it there? Where's the range of motion? Okay, good to go. See you next week. It's one of those type of things. So it takes really about 10 minutes by the time we get to Thursdays. Mondays and Tuesdays are a little bit longer. That's when I'm really setting up my week. But I want to see how fast you do analysis on. Okay, I'll do it next. Give me a random pair, and I'll do it. I'll do it next. But thank you for joining, YouTubers. I guess Raj is asking for gold. Sorry, you guys know the deal by now on the live stream. We just do the trade of the day, so we do just one trading opportunity for you guys, and I kick you out. If you want more, if you want to do requests, if you want to stay for the whole session, I recommend getting over to the website www.tier1trading.com, signing up for either the I would suggest starting with the trial membership. That way you don't have to invest anything. That's you never want to invest anything until you know that it's worth your while. But do that. You can hop in the London room and the New York room and get multiple hours a day of this stuff. But thank you guys for joining. Hit the like button on your. There may or may not be a Trading Edge video this week, depending on how much time I have. I'm going to try and do it, but it is Mother's Day. So I don't want to get in trouble with the wife, because then there will be no more Trading Edges in the future if I don't exist.